Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for our second day of our Precious Metals and Critical Minerals Conference. The next presentation of the day is from Adyton Resources. Please note, you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting. At this point, I'm very pleased to welcome Tim Crossley, Managing Director of Adyton Resources, which trades on the OTC markets under the symbol ADYRF and on the TSXV under the symbol ADY. Welcome, Tim.
Thanks for having me, Greg. Yeah, very pleased to be here. And welcome to my audience. This morning, I want to take you through. Some of you might have heard of our company, Adyton Resources. As Greg mentioned, we're listed on the TSXV and the OTC. I guess as a highlight introductory slide you can see on your screens, we're a company with 2.4 million ounces mineral endowment, gold, and two value pillars, which I'll take you through shortly. Basically, near-term production value pillar at our Ferguson Island asset, where we're looking to restart the Apollo mine before the end of this year, and then our Feni Island project, which provides huge exploration upside with a current foundation resource of 1.46 million ounces. Interestingly, for Adyton, we have a significant copper upside opportunity. We've seen some very large and rich intercepts of copper in our drill programs, which are active at the moment at Feni. The most notable intercept for copper, 6.4 meters at 5.1% copper, ADK4. The company's assets are in Papua New Guinea, and I'm Australian. I run the company based out of Brisbane, Australia, which is where I am at the moment. Let's click over the disclaimer. Papua New Guinea, some of you may not be familiar with. Certainly a jurisdiction with an amazing mineral endowment. Some of the world's greatest copper gold mines in Papua New Guinea. To name a few, Grasberg, Oktedi, Porgera, and also see some of the world's great mining companies operating in PNG, the likes of Barrick, Newmont, Zijin, and formerly Rio Tinto at Panguna. Probably an interesting feature of this slide here, an important point, is where Feni Island sits is between Lihir, one of the world's greatest gold discoveries, and Panguna on Bougainville. That discovery trend is about 120 million ounces, and the geological features that created the Great Lihir mine are really repeated at Feni, which gives us high conviction that we can grow the Feni Island resource from its current 1.46 million ounces, 1.5 million ounces to tier one scale, ultimately looking to grow that resource to something plus 5 million ounces. Where our Ferguson Island assets are located, a slightly different geological setting there. Some of the more notable mines in that region, with the Missima mine, 5 million ounces, Woodlark, which is on the island next door to us, just under 2 million ounces. But the interesting thing about these assets, they're very, very advanced exploration projects, and the Apollo mine was an operating mine in the mid-90s, so it gives us an opportunity to do a restart there with a very short timeline and permitting timeline. Just quickly on the corporate snapshot, shares on issue, 311 million. There are about 50 million warrants, 60-cent warrants related to the last financing, which was done at 40 cents Canadian, with a half 60-cent warrant. Share price at the time that this slide was taken was 32.5 cents. I think we're trading a little bit above that at the moment, with a market cap today of around about 110, 115 million Canadian. We've got plenty of cash in the bank, just under 18 million Canadian. But importantly, that cash is solely focused on the ongoing drilling of Feni Island. The the development of Wapollo and bringing that into cash flow is fully funded outside of our treasury reserves through a joint venture earning. I think this corporate structure just enables one to visualise the two-pillar value story of Adyton, which is quite unique. With the pillar on the right-hand side in the blue box, the Ferguson Mining Limited, that's a Singaporean company, 100% owned by the Adyton Resources, the parent company listed, the Listco. Our JV is at the Ferguson Mining Limited entity level, and that company owns the two Ferguson Island assets, Ferguson Gameta and Ferguson Wapollo. And as I mentioned previously, our target restart before the end of this year is the Wapollo project, and then shortly after that we'll be looking to permit and commence operations at Ferguson Gameta in a timeline of around about 12 to 15 months after Ferguson Wapollo is brought into production. On the left-hand side, you'll see the second value pillar, which is really our exploration upside pillar. That's the entity that owns the Feni Island project, currently with a foundation resource of just under 1.5 million ounces. But certainly we have high conviction that we can materially grow that resource and have been drilling at Feni since March, progressively releasing drill results as and when the assays come in, and we are fully funded to continue that exploration and drill program right through the rest of this year and into 2027. So we've got plenty of cash runway, and we're in the enviable position of looking to be in cash flow at Wapollo before the end of the year, which will enable Adyton to potentially sweep some of those cash earnings across to continue exploration at Feni without having to do any further dilutive capital raises. Our board and management, our chairman, Sinton Spence, is a long-term resident of Papua New Guinea. He's been living and running a very successful accounting business in PNG for over 40 years. My background is with BHP, but I have been operating in PNG since around about 2015 and have been very closely associated with an ASX company that's that's permitted 2 projects from discovery to full permitting in Papua New Guinea in the last decade. In fact, I think we'd be the only company that's done that. So have strong understanding and relationships with what needs to be done to get projects permitted in PNG. David Irvine, a representative of one of our largest shareholders, Pacific Lime and Cement Group. Dr. Chris Bowden is our Chief Operating Officer. Michael Gray, newly appointed Non-Executive Director, highly regarded mining research analyst in Canada, and a very welcome addition to our board. And our CFO, Chirag Patel, is based in Vancouver. Just a very quick introduction into the geology of Feni Island. What you can see here is a situation where you've got an island chain that's being compressed by a plate on the northeastern side and one on the southwestern side, effectively causing a slab tear in the Earth's mantle, allowing for fluids to come up, which create the mineralisation that we've seen at Lihir and the neighbouring island at Simberi, and we hope to be able to exploit with further drilling at Feni Island. The similarities between Feni and Lihir are quite startling in that they're early porphyry-style mineralisation, same age of rocks, similar alkalic epithermal style of mineralisation, and both systems are hosted within geothermally active extinct volcanoes. In fact, when the Lihir mine was first commissioned, they commissioned it with about a 60 megawatt geothermal power station, which provides an interesting opportunity for Feni when we take that into development, that we would have an opportunity to do the same thing and develop or create all our electrical energy through a geothermal power station. The one difference between Feni and Lihir is that our ore body is slightly buried. And what I mean by that is after the mineralisation events 500,000 years ago, there was a subsequent volcano on Feni Island which covered a lot of the mineralised ground. So up to a depth of, in some places it expresses its surface, but at its deepest point it's about 70 to 90 metres deep, which obviously means that traditional exploration surface techniques of mapping surface rocks, surface anomalies is not as useful. You basically have to go and do drilling or IP type surveys to identify your main drill targets. This slide really is an important slide because it points to a situation where the current resource, which is at Kabang, right in the middle of the island, which you can see on your slide, is not the only opportunity. There are a number of additional targets represented by the red polygons on this slide here. Now, Adyton has a whole of island land package. What you see on that slide is Feni Island, and that whole land package is held by Adyton under its exploration licence. The significance of this slide is that if you look in the top right-hand corner of the slide, which is at the same scale, you'll see Lihir at +1 gram per tonne outline. So that represents an ore body that's about 50 million or plus 50 million ounces. If you transpose that ore body into any of those red target areas, you will note that you could fit many multiple Lihirs on Feni Island. Now, I'm not for a second suggesting that Feni will be another Lihir in terms of 87 million ounces, but the point here, I guess, is that even if Feni ultimately proves to be only 10% of the size of Lihir, it's still going to be a world-class gold deposit. Further to that, and the opportunity that is emerging as we do more drilling and undertake more detailed assessment and review by geologists, is the opportunity to, or the view that Feni most likely hosts a large porphyry system, in addition to the overprinted epithermal, which is what we're seeing at Kabang. Now, our current drilling target is very much around expanding the Kabang resource in the epithermal area. Later in the year, we will be undertaking some high-powered deep IP surveys, which will further identify new drill targets outside of Kabang, but will also identify or assist in identifying drill targets to locate what we believe is the source of the gold and copper mineralisation, which is a deep and or offset porphyry system. So that's part of the work program in front of us. Is I guess in a couple of phases. First phase is to continue to grow the Kabang resource and take that to hopefully north of 2.5 to 3 million ounces in this current campaign. Undertake a deep geophysics survey, and with that identify drill targets to a deeper porphyry system. Of course, if we do identify a mineralised deep porphyry system, that does take Feni Island into being a resource opportunity that is significantly larger and more valuable than what's represented today. So it's a very, very interesting opportunity here. The geology absolutely supports that we should be able to host a very, very large system here, and the further upside is the porphyry system at depth. Just some recent drill results in plan view here. Typically, the gold sits from about ground level or where there's cover up to about 70 metres deep of cover, and then down to about 250 to 300 metres. So we've got an opportunity here where most of our ore is relatively shallow. This would be an open pit, large scale mining operation, and the deeper seated porphyry system would be something that would be investigated later, as I mentioned earlier. But certainly some significant grades here and intercepts. I think one of the more notable holes was our FDD2, where we saw significant gold grades. But also, when you look at that slide there, on the you'll also see significant copper coming in on some holes. For instance, FDD004 there, right in the middle. The left-hand side of your bar is copper and the right-hand side's gold. And towards the bottom of that hole, we started to see a lot of copper coming in. And we're seeing a lot of minerals that associate with copper, like molybdenum as well. So I think we're quite early days in understanding the association with copper. And we do predominantly view this resource as a gold resource, but it does look more and more likely that it will give us significant copper credits as we continue drilling and better understand the controls to the copper. Just in the interest of time, I'll skip over that slide because it repeats. Slight delay here. I mentioned briefly FDD2 is one of our more significant drill intercepts, and interestingly, the first 5 drill holes that we released are all over 100 gram meters, which is an important benchmark for potentially getting interested large-scale miners interested in your company to be able to demonstrate you've got drill intercepts of greater than 100 gram meters. But certainly FDD2 is a great hole, 144 metres at 1.24 grams. FDD1, 76 metres at 1.46 grams. So we're seeing good long runs of grade, and typically it's shallow. So as I mentioned before, this is not a deep underground mine. This will be a large open pit ore body, and predominantly the main payable mineral being gold with copper credits. Drilling status of our program at Feni. We've drilled just under, at the time of the writing of this slide, just under 10,000 metres. We've got a lot of assays pending still, but in terms of news flow and catalysts, certainly intend to keep drilling, 2 drill rigs operating 24/7. We don't have any seasonal constraints in Papua New Guinea, and that will be the catalyst for ongoing news flow as we move through the year. Further to that, we'd be looking at potentially releasing an upgraded mineral resource estimate later in the year, May, June timeframe, and subject to that mineral resource estimate, would potentially also look to move Feni into a PEA study as well. So there's plenty going on the island, and also around the middle of the year we'll be undertaking a fairly extensive IP survey, as I mentioned before, targeting new drill areas outside of the existing Kabang resource. Just a little bit about copper. This table here summarises some historical drilling, and an important note to make here, or point to make, I should say, is that there is no copper currently in the Kabang mineral resource estimate. It is purely a gold mineral resource estimate. Just by simple mental arithmetic, you can see that by adding copper into a gold equivalent would substantially uplift a gold equivalent MRE. That work hasn't been done yet, but will be done. On sort of simple spreadsheet maths, it suggests that there's potentially about a 17% uplift on a gold equivalent basis if you bring copper into a mineral resource estimate. And just to further that point, that's purely based on historical drilling and does not include any of our drilling that was done in 2021 and does not include any of the 10,000 metres that have been drilled in the last 10 months. All that represents resource upside and scale. Couple of points around our projects which may or may not be obvious to some readers, and that is both our projects are located on islands in Papua New Guinea. None of our projects are in the PNG Highlands. We see this as a huge advantage from a logistics perspective, whereby mobilisation is simply by barging your equipment or supplies to the island, taking the barge onto an unloading point on a beach, and then transporting it to the drill site. In our case at Feni Island, that's about a 1.5 to 2 kilometre transit distance, and at Ferguson Island at Wapolo and Gamata, it's even less. It's only about 500 metres. If you then wind the clock forward and think about developing a project here, likewise, bringing all your capital infrastructure in can be bought in the same way. And then when you're actually taking your product and concentrate to market, you don't need to have high capital intensity port infrastructure, and can simply load your concentrate onto a barge, have your export ship bulk vessel come in, anchor offshore in the required water depth, bring your barge up, tether it, and then load the ship with a barge to ship transfer. So it eliminates all the need for high capital intensity wharf infrastructure and port infrastructure, and very much simplifies and reduces the capital intensity of your development cost. Seems we're stuck on a slide here. I apologise. Moving forward to Ferguson Island. Ferguson Island is in the Milne Bay region of Papua New Guinea. We have two projects there. Wapolo, former operating gold mine in the mid-90s, produced about 9,000 ounces before it was shut down, but due to low gold prices. And I guess a company that didn't have the balance sheet to see its way through the tough times. And then about 35 kilometres east-southeast of Wapolo is the Gamata deposit. In aggregate, both deposits host about just under 1 million ounces. Although we talk about these as shallow development-ready projects, they're not. They are that, but they also do have significant resource expansion upside. The deposits in both cases are open at depth and open in at least one dimension, and can be significantly expanded. But the benefit of having these in the Adyton portfolio is our ability to get Wapolo and then shortly after Wapolo into cash flow and producing concentrate. That is our objective, and we're fully funded through our joint venture partner EVIH to deliver on that. We have submitted environment permits, mining leases for Wapolo, and we are actively working on achieving our mining permits by the middle of the year. In parallel to that, our joint venture partner has already commenced long lead purchasing of long lead time items, and we expect a lot of the long lead time items and infrastructure and processing plant infrastructure to arrive in Papua New Guinea in late March, ready to hit the ground once the permits are all in place. So this is a great position for the company to be in, to have a fully funded solution to get us into cash flow. Once we get Wapolo up and running, it gives us optionality. Do we expand Wapolo? We've just doubled the resource there. So we've now got the resource to support an expansion? Do we do that in parallel to developing Gamma? And then have we got the opportunity to then continue our development at Feni through using available cash flows out of the cash generated out of these projects? So it certainly gives us a lot of optionality and potentially puts us into a position where we don't have to take on any highly dilutive future capital raises to continue exploration at Feni. At Ferguson Island, I'm just going to take you through a couple of slides here that show some significant drill intercepts. These are again shallow open pit ore bodies, typically mineralisation from surface. I often describe to people that from the first excavator bucket you're in pay dirt. You can see Gamma hosts some significant high grade intercepts here, and that ore body is only about 500 metres off the coast, so access is excellent. We have strong landowner support, and this is a project that can easily be developed at a low capital cost, and produce up to our current planning is to develop what Gamma are up to about a 70 to 80,000 ounce per year project in concentrate. So we'd be looking to sell a gold-rich concentrate both at Gamma and Wapolo. Just moving on to Wapolo. Skip over that. Yeah, we're getting close to running out of time, but Wapolo again, shallow. Most of the ore at a mineralised zone at Wapolo is less than 50 metres deep. In fact, most of it's even less than 30 metres deep. So similar to Gamma, but the great thing about Wapolo is it's a brownfield restart. There's existing airstrips, there's existing wharf infrastructure, there's existing tailings impoundments. So it's a walk-up start. And an existing disturbed site, which means the environment permitting and your mining lease application can be done in a much shorter time frame, and that's principally why we're really focusing on the restart of Wapolo. Initially, smallish scale, producing around about 12 to 15,000 ounces a year. But given our recent announcement where we've doubled the resource at Wapolo, we're certainly looking at now at potentially going straight into a doubling of our mill capacity to producing between 25 and 30,000 ounces a year at Wapolo. So work in progress there. The JV is managing this. The JV has already undertaken about 8,000 metres of drilling at Ferguson Island. They're undertaking all the procurement, and they will be the operator. And once they fully earn in under the JV structure, we will be a 50-50 JV with standard joint venture arrangements, rotating chairman, equal distribution of dividends, etc. Just rolling through to my last few slides. That's a photo of the drill rigs at Ferguson Island. Just a quick summary of the EVIH joint venture. It's a fairly standard earn-in style joint venture where the JV has to reach certain milestones to progressively earn in. In our case, they will fully fund the development of the Wapolo project. And then the Gamma project will be funded through a shareholder loan from their parent company, which means both assets effectively have a full funding solution to get them into production. That's not properly understood by the capital markets, in my view, and provides, as that understanding filters through, I think will provide a significant re-rate opportunity for our share price. This last slide really covers off on PNG as a jurisdiction. Some notable points here: corporate tax rate 30%, royalty 2.5%, which is a very low royalty compared to most other mining jurisdictions globally. The mineral endowment cannot be questioned. Most of the legislation, mining legislation, is based on Australian legislation. You're working with a former British colony, Westminster system of government, free and fair elections since 1974 when PNG got independence, and a well-administered mining industry. I think we're close to wrapping up here. One thing I would like, if any of my listeners have questions, I would ask you to submit them, and we can follow up after this presentation. And also, I urge you to book a time slot for a one-on-one meeting. That would give us a much better opportunity to do a deep dive on our company's projects, and potentially bring in my PhD geologist who's leading our geology program to come in and give a more thorough description of the geology. Otherwise, I think that's my last slide and can conclude.